Hi everybody. So in today's video we're talking about dual coverage, which is when an individual is covered by more than one health insurance policy. So we get asked from time to time, hey, I've got an option to take a health insurance policy with my employer, and maybe I've got a spouse who has an employer that's offering insurance, and why choose between them? We're just going to take both. And so the sense from a person who's wanting to do that and kind of explaining it to me is saying, well, I get more coverage. That's why I like it. I get more coverage. And so the question we really want to tackle is more? And to kind of get right to it, the answer is oftentimes it's not, or at the very least it's not as much more as you're thinking when you're kind of confronted with that decision. So I'm not personally a big advocate of dual coverage. I think in almost every single case a person wants to avoid having more than one insurance policy. And I'm going to give you the 5 reasons why I don't like it. And then what I'll do is I'll concede some ground and say, well, whether I like it or not, there are a couple of situations where I at least can't debate that a person's logic may be somewhat sound as to why they want to have multiple policies. I personally would never do it, would never recommend it. But there are a couple exceptions that I could say, well, I'll back off and just keep my opinion to myself as far as whether I think it's a good idea. So getting right into it and talking about the 5 objections that I have to dual coverage. Number 1 is that more is more. So yes, you do increase the amount of coverage, but it's helpful to understand how you increase the amount of coverage. As a general rule, most policies within the main core of services that they offer are going to cover very similar procedures. So what they're going to cover more of is maybe one policy will cover certain doctors and hospitals, another policy will cover others, or one policy may have a stronger formulary of drugs that would be covered under its pharmacy program as opposed to another policy. So the range of what may be covered is going to generally be the biggest place where you're going to notice a difference between one policy to the next. And so you increase the range of services that are available to you, or at least the providers and prescriptions that you can get. But in addition to having a broader range, you've also picked up an extra set of plan provisions, and those are things like deductibles. So you've got now 2 deductibles to work with, 2 sets of co-pays, 2 sets of co-insurances, etc. And when you're dealing with a situation where you have one policy that might cover let's say a doctor. Let's say that you've got a doctor that you want to access that wouldn't be covered under one policy but would be covered under another policy. When you go see that doctor, you're going to be subject to one plan's deductibles, co-pays, and co-insurance. And then when you go and get a service performed by another provider that might be covered by the other policy, you're going to have another set of deductibles, co-insurance, and those 2 things are not going to overlap. The only place where they'll overlap is when you have a service or a provider or whatever that's covered by both policies. Then you'll have some overlap, then you'll get some shared expenses. But if you're looking at the way you use your policy, if you said, well, the reason I bought 2 coverages was so that I could extend the range of where I can go and receive care, for example, you've increased the number of deductibles and co-insurance that you're going to pay. So more is more, and generally you'll end up paying more. You'll jump into inefficient behaviors with your consumption, and you'll end up paying more out of pocket. So just more is more in all the good ways and bad ways. The second reason that I don't particularly care for dual coverage is that the accounting is a nightmare. So we talk about things like deductibles, co-insurance, co-pays, etc. Those things are very hard for the average person to sit and work out in the first place. So when a person goes and receives some care, and then they start getting their bills from the medical provider, they start getting their statements from the insurance companies, those explanations of benefits that say this is not a bill. You get those forms that kind of explain to you, okay, this is how the insurance accounted for your service, and this is how much the doctor got paid by us, this is how much they're billing you, this is how much they had to write off. Most people have a fairly difficult time understanding how that stuff works on a calendar year basis. So what was my deductible, what was my co-insurance, how can I get an accounting for that? That's hard enough. When you throw two insurances into the mix, it's almost impossible to ever really figure out what the coverage should have been, what the expenses should have been, and how do we identify errors so that we can go back to an insurance company and sort that out. And what ends up happening in a lot of cases is people kind of just give up and they kind of do this thing right here and just say, I didn't flip you guys off, I crossed fingers here. What they do is they end up going and kind of just taking it on sort of a faith that I sure hope it worked out, and I sure hope I got more coverage than what I would have normally got under one policy. But your ability to keep track of it is very difficult. And I'm looking at a list here, so I don't mean to keep glancing. But the third issue that we have is that the experience is very uncomfortable. So in theory, it makes sense that, okay, I bought extra coverage. My insurance experience for accessing medical care ought to be extra better. It really isn't. It becomes much worse, in fact. So to kind of paint the scenario, when you go and receive services and you have two insurance companies, especially when you're going and doing this for the first time, meaning that you haven't had an event yet where your insurance companies have had to kind of sort out their what they call coordination of benefits. What generally happens, you go to a provider, you have a service done, you submit your claims to the insurance company, or your provider submits the claims, and both insurance companies come out and they decline everything. And because insurance is very efficient, they use mail as a way to communicate this to you. So they send a letter to the doctor, they send a letter to you, and you get a letter that says, hey, your claims have been denied because of coordination of benefits, and we need you to do X, Y, Z. Get us something, fill out some paperwork. Essentially what they need to do is they need to follow some sort of a legal protocol. It's called the coordination of benefits, or the order of benefits determination, to basically fight it out between the two insurance companies to determine who is the primary payer. And so their way of actually handling that in the real world is they deny the claims at first, and then they wait for you to submit requested information to them before they take their sweet time trying to figure out who has to be the primary payer and carry the primary liability. In the meantime, while this happens, you usually don't get the mail, or you throw it away or whatever because it looks like garbage, and your medical provider comes back to you and says, hey, your insurance denied the claim, so we want you to pay us. So here's your bill and here's your delinquency notice, and if we don't get payment in 30 days, we are going to send you to collections. So you end up freaking out and going back to the insurance company or your broker or whoever, and ultimately finding out that, oh, okay, you got to submit all this paperwork. And where it really comes down to is a process that would have normally taken 30 to 60 days takes anywhere from 3 months to 6 months to sort out, and you've got to go jump through a bunch of extra hoops. Ultimately, it will work out, but it's just bureaucratically intensive, and it is far more complicated than it really needs to be. But there you have it. So there's reason number 3. Reason number 4 is a little bit more acute. It applies to situations where one of the insurance policies you have is an HSA eligible plan and the other is not. And the reason that this becomes difficult is because there's not really any coordination that exists between your insurers and an HSA vendor or your employer. So if you have a situation where, for example, you've got an HSA offered by one employer, or maybe you bought it on your own, it doesn't really matter. You don't need to have an employer in these situations, but let's just say you did. You've got an employer that offers an HSA plan, and you've got another plan that is not an HSA qualified plan. If we wanted to use the insurance language here, we call it the qualified high deductible health plan. So if one of the policies qualifies, one of them doesn't, you're not eligible for an HSA. You can only have an HSA if your sole source of medical coverage for major medical, and there's some technicalities in there for all you insurance people, but at the end of the day, if one of the policies is not an HSA eligible plan, then you're not eligible for an HSA. You have to have an HSA qualified plan. A qualified high deductible plan is your only source of major medical coverage in order to qualify for an HSA. But your employer's never going to know this. So if you have an employer that offers you an HSA, and if they say, well, look, if you take our HSA, we'll put 50 bucks or 100 bucks into your HSA each month, and you've got this other policy on the other side that disqualifies you. There's no way for that employer to know, and the thing about HSAs is they're your tax liability, not your employer's. So if you've got funds going into this account and you're not eligible for it, you're going to bear the tax liability at the end of the year, having to make that right with the IRS. You're the one who's going to be subject to an audit. And so if you have an HSA, dual coverage really doesn't work very nicely for you. There are some other technicalities if both plans are HSAs. There are instances where the deductibles will not accrue together, even if you have services provided that are covered by both plans. The deductibles won't accrue together. A lot of reasons why dual coverage is very unfriendly to HSA plans. So there's reason 4. Reason 5, and this is where I get a bit philosophical, and it's sort of probably one of my bigger reasons, just to admit it, bias, but it's the worst kind of charity on the planet because it's ultimately charity to an insurance company. And what I mean by that is under coordination of benefits, what doesn't happen, first off, is you never get more insurance protection than what the total value of the covered services would be. So if you had $1,000 in medical services, there's no way to get a surplus. There's no way to get $1,200 worth of insurance protection on $1,000 worth of total medical claim. You can only get up to $1,000. And you say, okay, well, I've got 2 insurances, and I'd have out of pocket on that. I guess they have to split it down the middle, and that's not what happens at all. What happens is first is one of the insurance companies is designated primary. The primary insurer has to behave as though there is no other insurer. The secondary insurer is the one that comes in and says, okay, well, I've got a couple of different methods of calculation that I can follow to determine how much of the balance, that wasn't paid by the primary insurer that I have to pay. And we talk about the methods in a little bit more detail in the blog article, and I don't like to explain heavy finance in videos. So the bottom line is whatever portion is remaining, the secondary insurer has some discretion as to how they want to pay that out. And so if you took a situation where you said, okay, let's say I've got an 80-20 plan in both cases, meaning the insurance company pays 80%, the member pays 20%. Well, insurance company A pays 80% of a $1,000 claim. They pay $800. So you pay them an insurance premium each month, and for full payment of the insurance premium, they assume 80% of the liability for your medical claims, and that's pretty standard. Well, the secondary insurer on a good day is going to only have their 80-20 in the most favorable situation apply to that 20% balance. So they're paying 80% on a 20% balance. So you gave them full premium to pay 80% of a 20% balance, if you can kind of work that out. So the one insurance company had to pay $800, and then the second insurance company is going to have to pay, let's see, that's $160. So 80% on 20% of 1,000, 20% of 1,000 is 200, 80% of that's $160. So one insurance paid $800, another insurance company paid $160, and yet you paid both of those insurance companies, you paid them full premiums for both policies. So one insurance company got to shove off most of its liability, and the other insurance company had to carry its liability, but they both collected full premiums. So one of them is getting charity. It's really charity money at the end of the day, and there's just better places to put your money than into insurance charity. Okay, so those are my 5 reasons. Now let's talk about the few reasons that I kind of have to swallow my pride and bite my tongue, and why it might work out for you. The number one is if you've got 2 employers that are paying 100% of a portion of your premium. So if they're paying 100% of the employee portion of the premium, and you said, look, I don't pay anything for either insurance. I don't pay at this company, and I don't pay at that company. I don't pay for the insurance. I can't argue with you. If you've got 2 employers paying for your insurance and you want to take both, you can. My advice truly would be just go and see if you can't work a better deal out with your employer. See if you can't have them put the money into a dental plan or a life insurance plan or something. See if you can't get extra HSA money. Do something. But if you said, no, I just want to take both coverages and I don't pay for it, I don't like it, but me not liking it doesn't change the fact that it can work out for you and it could be a good deal, and I can't dispute that. The second one would be, in this one I'm a little less, even a little less sure about it, meaning I don't really like this argument that well, but I'll give it to you, and that's that if you had acute enough needs, you said, look, I've got this hypothetical, I've got a prescription that needs to be covered, and I've got a provider that I need to see, and I can't find a plan that covers both of them, and my situation is serious enough that I've got to put two plans together to make that work. Maybe, I mean, to be honest with you, I have never run into that situation, but just entertaining, infinity, sure, maybe that could happen, and maybe you could run into that situation and it could work for you. I would never be haphazard about that, though. That would literally be a 1 in a million case, and if it did occur to you, sure, but I would always tell you to second guess yourself and say, there's probably a policy out there that fits your needs better than two policies, but that would be it. So anyways, that's the video. So those are the reasons I don't like dual coverage.